Hey guys, this is Steven, founder of Phoenix FXC. I just wanted to go over who you trade against in the market. We'll go over this real quick, but let's just get started here. So your trading rivals, you need to know this. You should know that trading the markets is a big competition to see who can take money from other people slash entities who don't know what they're doing and transfer it to those who do. Normally in a competition, you want to know who you're competing against, so let's go over them. First, companies and businesses. Corporation or business entities are constantly looking to exchange currency in order to fulfill their business transactions. They also need to be able to pay for goods and services in other countries, which requires a currency exchange. So to just give you an example, a Chinese company, we'll call it Company A, imports Company B's goods from Germany. So the Company A can sell their final product in the US because that's their goal. Now picture this, every time somebody purchases Company A's product, the American dollar must be converted back to the Chinese yuan. Then, Company A must exchange the yuan to euros in order to purchase the German goods to include in their final product. Real-world commerce happens like this daily and has an effect on corporate profit margins and businesses in every single company around the world. So this has a direct effect on the Forex market. This right here, part of fundamentals. Learn to analyze businesses that affect the country's economy of the pair you're looking at. Just a little tip here. The next one you're going to trade against, banking institutions. Banking institutions across the world make over 50% of all foreign exchange market transactions. They have their own separate market called the interbank market, where banks can trade vast amounts of currency, like mind-boggling amounts, directly with each other. Kind of cool, kind of scary to think about. Central banks. Now, if you've ever heard the term, they don't want you to win, it's probably these guys who are responsible. They are believed to be the market fixers, though they are not the only kind of market makers out there. Anytime a central bank takes an action, makes policies, it's most commonly to stabilize a nation's economy. However, they play a huge role in increasing or decreasing a nation's currency rates by manipulating an economy's interest rates, inflation, which we'll go over in a later video. But another one to go over is investors. Hedge funds, portfolio managers, investing firms, and other non-bank financial entities with large amounts of capital are other big players in the Forex markets. These guys sometimes can be market makers if their money pool is big enough. So keep that in mind. And then we've got the retail traders. Retail traders are like none of the above. They're like you and me who trade off of MT4, which is right here, right? Yeah. We're retail traders. This is a retail trading platform. We get access to the markets through brokerages who act as a gateway or portal to the markets. And there's tons of retail traders in comparisons to the retail traders listed above, but it's relatively low. I mean, there's a lot of banks too. In order to access the markets, a retail trader's got to have MT4 like I just showed you. It's got to have a broker and software platforms and everything. Retail traders, by the way, don't place trades like businesses, banks, investors, etc. Trading for a retail trading is more of a speculation thing, and we see a shadow of the actual interbank market. So that's just important to note. But retail trading is one of the fastest ways to get access to the market. The last one that you're going to trade against, and it's kind of important to go over, is market makers. They can manipulate spreads, requote, hunt your stop losses, utilize psychological tricks, and more in order to make you lose money. Now, typically that's a dealing desk market maker. Because of all the things they're able to do, they're able to psychologically manipulate people into acting in preferred ways that will make them money. They make these because they want you to lose. That's how market makers and dealing desks, that's how they make their money. You need to lose for them to make money. They make these manipulations behind news, political, economic events, and more. You can use this to your advantage if you learn to utilize fundamental, technical, and sentiment analysis altogether. For more information on market makers, I'm going to make a video on it. We also have it on phoenixfxc.com/market-makers, just so you know. So now that you know who you're up against, we're going to go ahead and conclude this video and move on. Thanks for watching, guys. Appreciate it.